Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great trading day yesterday as we were looking at another day of some decent market movement where we have the S&P this morning is up 34 points after a little bit of a pullback during the day yesterday. Nasdaq is up 61 points. After a deeper pullback, we're actually seeing the Nasdaq showing a little bit of relative weakness. And then we also had a Dow Jones position that we had looked at yesterday, which we will also review today. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you are a returning visitor, do me a favor, leave a comment section down below. If you take any of the trades that we look at here at the Daily Market Commentary, it would be much appreciated, as the computers like to know that human beings are watching. So let's go ahead and dive in. I'm going to start with the equity markets first. And when we look at the equity markets, we're going to kick it off with the ES. And looking at the ES, we're up 34 points. We looked at a couple of areas yesterday of demand, and we did get a decent pullback yesterday. And our pullback came back to the open of the Globex. So we actually came back to the Globex open, which was right here. And that Globex open it held really well in the S&P. It did not hold so well in the Nasdaq. So in the Nasdaq, we came back to that Globex open and just popped right through it. Nasdaq actually came down below a 15-minute level and bounced really close to this additional one here. But unfortunately just didn't get us the entry. The thing I will notice is that the Nasdaq is not above its overnight high from Tuesday, whereas the S&P is well above its overnight high from Tuesday. So we're definitely seeing some relative weakness in the S&P versus the Nasdaq. Now, as far as trading ideas and trading opportunities, our 4-hour trend still continues to be up, so we still would want to be more bullish than we are bearish. And I would need to have a good pullback to a quality area of demand or a good breakout candidate opportunity. Well, in the overnight, we have this little level right in here, which is right there around the European market open. If I trim that down to the 15-minute chart, we've got this little level here and then this long pivot down. I actually like this one here. It's not quite as strong of a time of day, but it's a much cleaner level right in here. Now, your stop has to go a bit below there. You've got to give yourself some wiggle room on the stop in this case, but I think that one looks to be fairly clean for a bit of a pullback this morning. In the Nasdaq, very similar picture, but the Nasdaq, like I said, is for the first time in a while, is our weaker market. Now, when I look at that, that then also forces me to take a look at the Russell. The Russell, counter to the Nasdaq, is very strong, right? So counter to the Nasdaq, the Russell is above its Tuesday high and is also very strong. Now, we had a breakout trade here in the Russell, and this breakout trade gave us no basing whatsoever. But if you do like the rut, you have a nice pullback area here in the Russell down in this region for a potential reversal. Looking at the Dow Jones, so yesterday we had our breakout trade in the Dow, and yesterday we talked about, okay, if you took that long in the Dow, take your stop and move it up underneath this level here. And so it has moved up another a little over another, 300 points since that level. So if you're still in this position, which I spoke to a couple of people yesterday that are still in this position and they didn't get out because they moved their stop up underneath that 24 level, take your stop and move it up again and move it up here underneath 25, or right just above 25,000, right underneath that Wednesday, that overnight demand level. Now, that level still gives me 300 points that it can pull back against me, but that locks in a bit more profit. If you got long back in this 24,763 area, you've picked up 15. You've picked up 500 points worth of Dow movement, so it's moved very, very well your way. Whenever you're ready to take profits, now where should you take profits, by the way, in this kind of a position? Well, we've got to go out to our daily chart. We're nowhere near the highs. So we are coming to the gap fill area here at 25,759 on the daily chart. So keep that in mind when we're looking at daily charts. Even when I go to the hourly, I've got those wicks up here, and then it would be this area right up here, 25,687 would be kind of the next level. I have to zoom in on that to show it a bit better. It's this gap fill area right here. So that would be our next supply area on the hourly chart when we're looking at the Dow. All right, next, moving over to crude. So in crude oil, we were looking at the September contract. Now this one's a punch in the proverbial gut if you took the breakout trade, because it popped up above that level and then came smoking right back down. I didn't get immediate basing in front of the level, but I got basing close enough to tell me it may be worth getting into this position. And then it just came right back down. So I still believe that this is the better level if price gets up above this region here. If I get quality basing, but I've not gotten quality basing in front of the level. I'm still overall bullish. This was just a little bit of a shakeout, unfortunately, in that position. Now, fairly small level because we had a pivot right here. This was our closest pivot, so a fairly small range there, but still enough of one for it to be one of those annoying trades that pops you out and then moves back down that way. So now we're just kind of moving along sideways inside this area. If I move to the 4-hour level, my 4-hour level is still telling me that the better probability is that it's going to break out to the upside. If you're not comfortable with another breakout long, which there's, it's okay to kind of, be a little gun shy if you got stopped out on the last one, you can hold off for just a little bit and wait for a bit more basing. We're now looking at a bigger time period. Now let's go ahead and take a look at gold. So in gold, we had our contract rollover gap yesterday, and the contract rollover gap price gapped up. Now, when I'm looking at a contract rollover gap, I don't typically look at a gap and go scenario. What I usually want to look at for a contract rollover gap is a fading of the gap play. The fading of the gap play is typically going to be the better go. So I already had a demand level down here. And price did come into that demand level. If you took that long, you touched into that level 1, 2, 3, 4, 5. At the end of the sixth candle, you should have been out of that position anyway, simply for the contract rollover purposes. But told us to get out of that position. Well, now we have this to me is a new area that we can use as demand, and this is one of the reasons why I don't really like it when a broker will stitch together contracts to take away rollover gaps. Rollover gaps have a lot of validity, and I do really believe in them. So I'm going to wrap my lines around here as a demand zone. Now, obviously, it depends on the arrival into that level, but that would be what I would look for in that case. Supply level here does still exist with this wick over wick here. Not a great time of day, and so you may want to look at that as a confirmation. But I think that if we do fade that gap and come back into here, that could be a really good entry to get to that level. Next, let's look at our bonds and currency markets. So in our ZN, we had our contract rollover gap in the ZN as well as we moved over to the September contract. So on here, gapped down. Looking at this, I'm going to go to a 15-minute, and I'm going to take the area just above the gap in this case, just slightly above the gap as a potential area of supply. That's really the first level that we've seen in the bonds because, yes, we gapped, but we still stayed inside of our very tight range on the 4-hour, right? So if I go back to my 4-hour, you'll see that we're still very much inside of our very tight range. Now, the thing I want to look at is that not only is this the gap area, but I would call this your line of control, right? So when we talk about a line of control, this is that line that everything, all the prices, all price keeps coming back into this line of control. And I make that right through there because this is the area that we're kind of hovering around. This is the line of control that price seems to act as a magnet. So I think even if we come down a bit from here, odds are this level becomes a pretty decent supply area on the return. Next, in our Aussie position, so the Aussie is continuing to rally. We did finally get some sort of a definitive, break out of this controlling candle, and now we're continuing to go higher. So a breakdown to a quality area of demand is going to be the best setup. We did have a nice breakout trade that set up yesterday right in here. If you wanted to take the breakout, you got a little run away from that zone. Didn't necessarily give me 3 clear touches, though, so I'd be totally all right with you not getting in on something like that. And so now what I'm looking for is, where's my next entry candidate? Well, on a 4-hour chart, I do still have to look at where my next overhead supply is. And I do have some overhead supply coming into play right here at a gap fill level, right? So this is a gap fill level coming in that I need to be aware of, and it is fairly, it's a bit of a ways away on the hourly chart. So when I move down to the smaller time period, say the 15-minute, I do have this little level right in here that's worth paying attention to right there at the 4 a.m. after this really big straight-up rally. So keep an eye on this one for today. In the euro, we just had a huge run up on our most recent hourly candlestick. It was a very big move. Now, what caused that shot up was the ECB president was speaking, and price rallied on some of his comments, specifically around the GDP. He said that on the mild end, the GDP should drop about 8%, and on the more severe end, about 12%. And the euro actually rallied up on those kind of announcements. So when we're looking now at what the euro is giving us on a 4-hour chart, we had looked yesterday to the fact that we need to start looking bullish, and we came close to our entry, and it was just a bit outside, as they say in baseball. As we came really close, we're unable to get filled. Now I need to look, not the daily, I need to look a bit lower to see where can I get in. Now I typically would like to look at a level like this, but I'm still going to avoid that level. And I'm going to come back down to the European market open from the day prior as really my better quality zone. Yesterday we were basing too close to that level right in here at the DMC recording time, but I'm going to leave that level intact for now as a good place for a reversal. Canadian dollar, we had a really nice breakout trade set up, and we just got basing after the breakout. And so when you get basing after the breakout, what you want to do is test the next level of demand as your area to get long, and it would have been somewhere down in here would have been the level to look for. Unfortunately, it didn't come back to that zone. So now I need to find a better chance to get back in, and I'm going to use the basing we got after the breakout as my area. Now, this isn't a super quality zone, not the best because of this red candle here giving me a bit of a retest. So I'm going to make that a confirmation entry as the better way to get in on this piece. If I go to the 4-hour on here, we will see that our 4-hour is looking to a supply level up above, so there's still room for price to get up there. So let's see if price comes, if we get a little bit of sideways price action here on the hourly chart before we get a breakout to the upside. All right, next, Great British Pound and Japanese Yen. So we did have an entry to our pound supply level from yesterday. So looking at our pound supply level from yesterday, this was our reversal trade, and price did come into that zone, and we got a pretty nice move away from that level. We've come back up to it a second time, but I'm going to remove it because we traded halfway into the level. So that was a pretty nice little trade opportunity. Our demand level down below, these two wick over wick areas, still holds true. And the other side is that because we hit here once, if we get basing inside this level, we could get a breakout candidate. So those both set up pretty well. And then the Japanese yen, we didn't have any levels set up in it yesterday. I'm going to look to this resistance point up here for a potential breakout. But as far as a reversal goes, I've got a really nice tweezer top level up here that I think might make sense on a 15-minute time period. So we will wrap our lines around that area. As far as this evening, we have an open forum session scheduled for tonight at 7 p.m. So tonight, open forum, 7 p.m. Central at tradersarmy.com. I'd love to have you join us. Go to tradersarmy.com, become a premium member, and you will be able to access our open forum. Our open forum session is really just an opportunity for you to ask any questions that you want to our traders and instructors. We have a few more days left on our Memorial Day opportunity for you to join. Use the promo code HEROES to join for 75% off your first month, and you will also get the trade plan class. As something that we give you. We believe that everybody needs to have a solid plan, and so that will be as well. So if you have any questions, as always, send us an email, support@tradersarmy.com. Thank you so much for being here today, and I will talk to you soon. See ya.